Hi guys, got the GBP US dollar Forex chart in front of us here, and this was a trade that I took yesterday. Excellent trade, 5-to-1 reward to risk, and I thought it would be interesting for you to go through the reasons for the trade and the analysis that I did on the market beforehand. So in order to do that, we're going to zoom out to the 30-minute time frame and have a look at what's been happening in the market. So you can see from the chart in front of us, this is zoomed out 30-minute chart. You can see that the market's been in an uptrend. It's been making higher highs and higher lows. So first high, first low, higher high, higher low, higher high, higher low, higher high, possible higher low. So the market's been in an uptrend. And it's been using the support and resistance levels that you can see, the black lines on the chart. It's been using those as support and resistance as price has been rising through the trend. So you can see that this particular level here acted as resistance here and then broke through the level, and that same level acted as support. And this is of course what happens when the market's in a trend. So market goes up, resisted by this particular level here and here, and goes through, comes back down through that particular level, and then zooms up, and this is a confirmed support level at this particular time here. And we've got another support and resistance level here. So market's resisted at this level, it's come back down, broken through that level, and actually that level's been offering resistance during this particular trading range that we're in at the moment throughout that particular range. So as you can see, this was where I took the trade yesterday. As you can see, the market's in a mini trading range at the moment. So because the market's in an uptrend, I'm only looking for long trades, and when the market came back down to this particular support and resistance level here and started gradually moving back up, I was interested in looking at long trades from here, which is what we got. So that's the longer term context for the trade, and that's one of the three elements that I'm always looking for before taking trades. I look for context, content and confluence, the 3 C's as I call them. So the context is, where's the market, what am I expecting it to do, and when it does what I'm expecting it to do within that context and it gives me a good signal, then we've got an opportunity for a good risk and reward trade. So let's go and have a look at the 5-minute chart now to see what the content was like for the trade. So you can see that the market had come down. This was the interest rate decision, Bank of England interest rate decision last week, and the market acted by dropping right down to the support level here. Throughout the morning on Monday, the market started giving indications that having consolidated at this level here, it was actually going to start rising up. So this is where I'm interested. So let's zoom in a little bit more detail. And this is what we'd got at 4 o'clock yesterday afternoon. So again, looking at the context, what have we got? We've got the market, it's in an uptrend. It's making higher highs and higher lows pretty much throughout this, and it's also currently in, as you can see, in a small trading range. So you can see that the trading range highs are here and the lows are here. So this is the current trading range. The market's currently right at the top of the trading range, the small trading range here. So we're looking for indications that it wants to break out of this range and break out higher. Breakout trades often offer excellent risk to reward because the market will react aggressively if it can break through this particular level, which is what actually happened. So let's have a look in a bit more detail. This is our trade. And so the market rose to the top of the trading range here, and I'm looking, these are 5-minute candlesticks. So I'm looking within the content of the candlesticks to say, okay, what have we got that tells me that the market's going to break out of this particular zone here and continue the uptrend higher. And what we actually got was we got an engulfing candlestick. Go into it in a little bit more detail here. We got an engulfing candlestick, and so the content within the candle itself, the content within the candlestick itself indicated that the bulls were going to attempt to break free of this particular range and break out, which is what actually happened. So this particular engulfing candlestick, the body of the candlestick engulfed the body of the previous candlestick. So the open and the close of the previous candlestick was engulfed by the open and the close of this particular candlestick. So the content within the candlestick was right. We've got context, which is we're at the top of a trading range, small trading range. We're looking to break out of that particular trading range. We're in an uptrend. We're moving away from longer term support. And so we've got the right sort of context. We're now looking for confluence. So a confluence of signals would indicate that there's a good probability of success of the trade. So we've got confluence here because the market rose up. You can see the exponential moving averages here. This blue line's the 8 exponential moving average. That's the 20. The red line's the 20, and this is the 90 exponential moving average. In fact, you can see that the market was in an uptrend, and when it's in an uptrend, it tends to spend more time above these exponential moving averages than below, and it was constantly being rejected off the 90 moving average upwards. So when the market then comes back, it goes up to the top of the trading range, it comes back to the 8 exponential moving average, and it rejects upwards. And it rejects upwards, and you've got aggression right at the top of the range, and so you've got a good entry signal there. What actually happens at the top of these trading ranges when the market breaks out is that you've got double pressure. And what I mean by that is that lots of traders are trading within this trading range, so they're trading short from the top of the range, long from the bottom of the range. And so when the market breaks out of the trading range higher, the traders who went short here will exit their trades, and also the bulls who saw the same thing as I did will be going long. That's double pressure, and it means the market's going higher. And so we've got context, we've got content in the candlesticks, and we've got confluence offered by the exponential moving average. So my particular system takes me into the trade at the close of the engulfing candlestick. So the moment that particular candlestick closed, I entered into a long trade and took the market higher. My stop was below the engulfing candlestick, so you've got a very small risk associated with the trade at this particular time. In fact, the low of the previous candlestick offered an extra amount of security for our stop there. So stop at the bottom of the candlestick, entry on the close of the candlestick, and the market's in an uptrend, so I want to give the market room to breathe. When it came back down here, we're not looking to exit. You can see that the market's operating in the way that it always operates, in that it's using support and resistance. You can see the highs here. Market came back down, hit the previous level of the previous highs here, and rejected very, very strongly upwards. And so at this stage, again, we're looking for a reason to exit. What is there within the candlesticks that says, okay, this might be over? Well, there's nothing here. That's a pause, and the market's rising up strongly. Again, this is just consolidation, possibly at the highs here, and then the market makes a spike. And this is a pin bar. This is a pin bar. You're way away at this point in time from the moving averages. Way away from the moving averages, and so that's sufficient evidence to say this might be over for me, and I exited the trade there. Could have hung on, as you can see, quite a lot longer and got more out of the trade, but 5 to 1 risk to reward, excellent trade, can't argue with that. Hope you found that useful. If you're looking to learn to trade, then you want to take into consideration the context, the content and confluence. This is the sort of thing that we teach in our trading training courses. We've got a Forex trading course for you at Excellence Assured, and a day trading and swing trading training course as well. So if you're learning to trade, then we've got some excellent structured training courses and resources on the website at Excellence Assured. For more of the same kind of analysis, price action analysis, do subscribe to the channel on YouTube. Plenty more of these videos on the way. My name's Anthony Beardsall, thanks for watching, and I'll see you on the next video.